let's focus on capital gains tax solutions. You've mentioned that now you're kind of removed yourself from production for the most part. And, this is your focus. And it seems like helping your team and then structuring deals with this capital gains tax solution. So you've alluded to it a couple of times. Why don't you elaborate a little bit?
Thank you so much, Jeffrey. So most high net worth individuals, they struggle with capital gains tax, and it's somewhere between 30 and 50% when they go to sell their high-end primary home, business, investment real estate, public or private stock, cryptocurrency. And so we use a deferred sales trust, which is not a 1031 exchange, to give them tax deferral, liquidity, diversification, and the ability to buy property at optimal timing. Okay, all so they can create and preserve more wealth. And so what I want you to think about, Jeffrey, is, I know that's a big statement there. I'm going to unpack it for you here. I want you to think about Blockbuster versus Netflix. Do you remember going to Blockbuster, Jeffrey, back in the 80s or 90s, depending on when you were born?
I do.
And you show up on a Friday night and you're excited to get that movie, right? And you see it across the hallway there. And it's behind that cardboard, right? And so you can tell it's there because the cardboard's pressed out, right? And so you're walking towards it, and you got your popcorn ready. You got, maybe it's your girlfriend at the time. She said, "Get that movie." Your one job, Jeffrey, is to get that movie. But just before you get there, somebody grabs that movie right in front of you and looks at you and smiles because he was doing the same thing, and your heart just sinks, right? So you're upset you didn't get your movie. So you get the movie next to it, and you're like, all right, well, maybe that'll settle for that, or that'll work. But then 3 days later, you forgot to return it, right? And so you get that penalty, you get that fine, right? Whatever. And then you forgot to rewind it, you get that again, right? And you're like, what? There's got to be a better way, right? And now you live in Huntington Beach, so you don't mind taking that cruise down, and it's a sunny and it's nice weather. But there's people who live in Wisconsin, and they're like, I'm driving in the snow to figure this thing out. Well, Netflix said there's got to be a better way, right? Well, I want to propose to you that the 1031 exchange is like Blockbuster. And it's a transactional way of doing things, and it puts people in a position that they don't want to be in, right? What is that? Well, it's 45 days to identify. It's 180 days to close. We call this the shotgun wedding, right? Get engaged in 45, get married in 180. Our parents taught us to sell high and buy low, Jeffrey, right? They didn't teach us to sell high and buy higher 180 days later in a very low cap rate environment with more debt and more toilets, trash, and liability that I don't necessarily want. Okay, so what's the alternative to that? Well, I'm going to tell you a story to illustrate this, and this is what maybe a believer, and my goal for this next few minutes we have together is to make everyone a believer of the Deferred Sales Trust, or at least take the step towards that. And this is a gentleman who I call the Monday morning quarterback story. He dropped back and he played it perfectly, right? And what he did is he sold in 2006, and if you saw the movie The Big Short, these folks saw what was coming, and we even saw what was coming. Even a lot of my clients saw what was coming, but they felt they had no way to defer the tax and sell without getting hammered, so they just kept 1031ing. Well, this gentleman learned about the Deferred Sales Trust, again, which is an alternative to a 1031 exchange. So he sold a $20 million asset in Minnesota. And he's looking around for 1031, doesn't make any sense. He goes, I'm not going to overpay. He moved the money into the Deferred Sales Trust for the first time. So the first thing is he's in a tax deferral state. He moved it into the Netflix, if you will, okay? And he's waiting on the sidelines. He's put it into stocks, bonds, mutual funds, very conservative stuff. He's liquid. He's out of debt. He's keeping his powder dry, and he's just waiting for a deal. A year goes by, 2 years goes by, nothing, 3, 4. Deals started to come. But in particular, the property that he sold for $20 million, guess what? The bank calls him up and says, hey, you sold it to that guy 5 years ago? Yeah. Well, we just foreclosed on it. And we're just curious, would you like to buy it back? He goes, well, maybe. What's the price? He said, well, about 60 cents on the dollar, about 40% less than what you purchased it for, or you sold it for. He said, that sounds pretty good. So he reallocated his investments into the trust, put it into an LLC, and he bought it back at 60 cents on the dollar, right? He sold high and he bought low. By the way, all tax deferred, not using a 1031 exchange. And so I heard this story from my mentor, by the way, he played for the 49ers. He's the co-founder of the Deferred Sales Trust, and he's the financial advisor in this scenario. And I'm like, wow, you can actually do that. He says, yes. I said, I'm all in, right? And so the first thing to understand about the Deferred Sales Trust being Netflix is timing, right? Our parents taught us to sell high and buy low, right? So the Deferred Sales Trust, we can buy at optimal timing whenever you want. Second, you can diversify, right? Diversification, especially for a lot of baby boomers, right? They are looking to preserve their wealth. They're looking to retire from the toilets, trash, and liability, but they also want the ability to go in real estate if they want to, and be active if they want to, or be passive. So the Deferred Sales Trust, you can put it into stocks, bonds, mutual funds, hard money lending. You can do ground up development. You can do passive investments into different multifamily syndications, okay? So we just closed the deal in Oroville, a gentleman who sold a $2.5 million property. He had 30 years, no depreciation. He was about to write a check for about $1 million of tax on his $2.5 million sale. And he says, well, I wasn't going to do a 1031 anyways, so can I just defer the tax? Yes. So he deferred it, and we put him into multiple real estate opportunities, or passive. By the way, outside of California, places like Texas and Florida and Arizona, they're very landlord friendly. And we also did a primary home sale in Palo Alto for $8.3 million. And this gentleman was able to defer tax. Remember, a 1031, because it's blockbuster, it doesn't work for primary homes. Okay. It doesn't work for businesses. It only works for investment real estate. Whereas the Deferred Sales Trust, the Netflix, it works for primary homes, works for real estate. It can save a failed 1031 exchange. Businesses, cryptocurrency. We're working on a cryptocurrency case right now, Jeffrey. This kind of blow your mind. They bought Ethereum for about $100,000 over the last 5, 6, 7 years. Well, it jumped up to $6 million in 2017, and then it crashed. Right now, it's up to over $12 million. Okay. And so what they're going to sell is this money out in outer space or out on the interweb somewhere out there. They're going to defer about $5 million of tax using the Deferred Sales Trust. But then guess what? They're going to move those funds into investments, which gives them cash flow, which does what for them? Gives them a chance to retire, spend time with their kids, travel more. Now have to work 60, 70-hour weeks in Silicon Valley. So this is the transformation that we provide. And so I'll pause there because you might have some questions.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.